Thursday, March 16th, 2023, Maneco 64, home of alternative economics and contrarian views. Credit Suisse, we're going to look at that today, of course. It's really out there after SVB. It is contagion, in my opinion, but Credit Suisse is much more important, of course, than SVB because Credit Suisse has derivatives and Credit Suisse is a too big to fail bank. So we're going to look at that today. I think Credit Suisse is just the tip of the iceberg. Before we look at Credit Suisse, just wanted to talk a little bit about the UK budget that came out yesterday, the budget announcement or spring budget, whatever you're going to call it. Some of you have said, can you talk about the budget a little bit? I'm not going to talk very long about it because the first question I'm going to ask you, if you go back 25 years and look at all the budgets we've had, how they've come out the next day, the newspapers, who's going to win, who's going to lose, what you're going to benefit from it. Just tell me, have things gotten better? No. So that's the way I feel about this budget. It's my analogy is someone at the plantation, some kind of overseer, comes out twice a year and tells the people who work there, the peons or the slaves, how much they're going to be able to keep from what they grow and all the work they do. That's how I feel about the budget. But I did see a couple of things that kind of raised my eyebrows a little bit, and they might not seem important. One of them was this one here. £5 billion expansion of free childcare for 1 and 2 year olds in England to help parents to return to the workplace earlier. And then it says schools to offer wraparound care. I think that's really bad, very nefarious. You might think, well, Mario, they're providing help to parents so they can go back to work and leave their children at school the whole time. Well, I think that's bad because children are going to be brainwashed even more. What's the solution? Well, the solution is for young couples to maybe try to avoid having both working. I know that's difficult, but a child is very important, and leaving a child at school, for wraparound care doesn't sound very good to me. So I thought that was very nefarious. The other part that I thought was wishful thinking was this here. UK inflation forecast to fall more rapidly than previously estimated. So there you go. They're seeing negative CPI, believe it or not, in a couple of years. It's a very nice chart, isn't it? We'll have to see if that chart proves right. Back to Credit Suisse. It's funny because when I lived in Switzerland and I started working in Geneva, I opened an account with Credit Suisse because it was right next to where I worked. So that was the bank that I had, but it was just like a high street bank or a normal bank. But the problem with Credit Suisse, like with a lot of other of these too big to fail banks, is that power, greed, corruption has gone up to their heads because they know they're going to be backstopped by the central banks, by government, because if they fail, the whole system implodes. And it's all because of derivatives. So I'm going to touch upon derivatives right here. The BIS came out recently, the latest numbers for derivatives in the first half of 2022. The notional amount that these too big to fail banks have bet on is 632 trillion, not billion. The GDP of the world is just over 100 trillion. So it shows you how leveraged these banks are. And the problem with derivatives as well and I've spoken about this counterparty risk as well. I think I have a playlist for both derivatives and counterparty risk, is that while the system is running smoothly, which we know isn't right now, there's no problem with this huge number, 600 trillion, or some think it's actually 1,000 trillion, which is a quadrillion. There's no problem with it because the margins get paid depending on the fluctuation of the underlying securities. But when one of these too big to fails that are heavily involved in these derivatives collapses, there's a daisy chain effect. And that's why not just the Swiss National Bank, but even the Bank of England, the Fed, the ECB are very concerned about Credit Suisse, because they know if Credit Suisse goes, all the too big to fail banks in their jurisdictions will go as well. And I think Nouriel Roubini, and it's not an endorsement of him or any opinion of him, he said something interesting, I think yesterday, that Credit Suisse is too big to fail and too big to bail out. So think about that. I think the whole system is just a house of cards. And I know now that the Swiss National Bank has come out with a 54 billion franc facility to help Credit Suisse, or 50 billion francs, $54 billion facility. Don't forget, the Swiss National Bank lost 132 billion francs in the last year. So here we have a bank that's underwater to the tune of $132 billion, helping a bank that's insolvent. So what are they going to do with that? Well, they're just going to try to buy back some debt that they have. I think around $3 billion of debt to reliquify the bank. I think it's a Band-Aid. I think it's just the tip of the iceberg, like I said. But I wanted to go through some of the history of Credit Suisse in the last few years. I did a little bit of research just to show you how this bank really doesn't deserve to exist. It's been a catalog of scandals and corruption and bad risk management, huge losses. They basically screwed their wealthy clients because they're heavily involved in wealth management, aside from investment banking. Prime brokerage. What's prime brokerage? Well, that's one of the big problems, I think, because prime brokerage is when these too big to fails provide a brokerage service to all these big hedge funds. And the hedge funds are just ex-Credit Suisse bankers or other JP Morgan bankers, Citi bankers, Goldman Sachs bankers that leave the bank because what they do is too risky, and they open a hedge fund, but they're still funded by these banks. Case in point is like Brevin Howard. Alan Howard used to work for Credit Suisse. I wonder if he keeps his account with Credit Suisse, his prime brokerage account. So, yeah, the saga kind of started in 2019. They had a CEO from Ghana, yes, a Ghanese CEO for a major Swiss bank. And I think Credit Suisse was founded in 1856 by a Swiss industrialist called Escher. So there you go. And this CEO, TM, he fell out with someone in the bank, someone called Iqbal Khan. And basically, this guy was poached by UBS, and he was on garden leave where he had to wait to start working at UBS. And Credit Suisse hired spies to spy on him to make sure that he wasn't talking to their clients, because you're not supposed to do that during garden leave. And this was a scandal. It came out, and it was learned that Credit Suisse was not just spying on this guy, but they've done a lot of corporate spying. So that's where it kicked off. So they brought in a new CEO back in 2020. Thomas Gottstein. He came from the high street part of the bank, the normal banking. So they thought he was a safe pair of hands. And just a little anecdotal, a little story about Thomas Gottstein, because when I lived in Switzerland in my 20s and I was working there, I played a lot of golf, and I played a lot of national tournaments. I traveled around Switzerland, which isn't that difficult to do because it's a small country, and I played a lot of tournaments. And Thomas Gottstein was a very good golfer. I didn't know him very well, but he was always there at the same tournaments. But the problem with this new CEO is that he came in just when COVID kicked off, and then you had the Green Seal scandal. that was the supply chain company that failed, that David Cameron was involved in, and they got their clients to put $10 billion in a fund, a Green Seal fund, their wealthy clients. That money had to be frozen, and 2.3 billion of that money was unaccounted for. So there you go. That was the first scandal. and they didn't even compensate their clients from their reserves. And then you had Archegos, the hedge fund that collapsed. And the guy there was Bill Huang, family office Archegos. And Credit Suisse, as a prime broker, lost $5.5 billion. That was their biggest loss in their history. What else have we had? Well, they brought in new chairmen, new CEOs. They brought a new chairman in April 2021, a guy called Antonio Horta Osorio. He was CEO of Lloyd's for 10 years. And he didn't last very long because he broke the COVID lockdown rules by flying into London to watch football and tennis. And he was abusing the private jet for Credit Suisse, flying home almost every week. So that he had to go. And then you had a Mozambique tuna bonds scandal as well. And in 2022, there's a cocaine smuggling allegations. They were involved with the smuggling ring and money laundering from Bulgaria. And then you had the Swiss leaks scandal. The list goes on. And they also did try to lumber hedge funds, their clients, prime brokerage clients, of course, with risk involved in lending money to wealthy oligarchs to buy jets and yachts. That was another scandal. So the conclusion here is that it's been like a really bad managed bank. The risk management has been really bad. And also the mixture of trying to please clients from different sectors of the bank, wealth management, investment banking, and prime brokerage has led to a lot of moral hazard and a lot of bad immoral actions. And I think who the people who are might suffer, of course, are the normal mom and pop, high street banking part of Credit Suisse. So you might say, well, this is just Credit Suisse. They are like an outlier, but I don't think so, because if you look at JP Morgan and what Catherine Austin Fitz has looked into, she made a salary report. JP Morgan Chase selected legal, regulatory, and enforcement settlements 2002 to 2019. I've got the report here. I've gone over all the fines that they've paid, and that's not counting the last 4 years. And they paid about $44 billion in fines from 2002 to 2019. We saw HSBC, another too big to fail. They were let off by the U.S. State Department some years ago in relationship to money laundering for Mexican drug cartels. So it's not just Credit Suisse. It's these too big to fail banks. And it's moral hazard. they know they're above the law and they're going to be bailed out comes what may. And hopefully people will realize that these are not bailouts, because the central banks now are in just as bad a financial condition than the banks themselves. The Fed has over $1 trillion of losses. Swiss National Bank lost almost $150 billion in the last year. So I think faith and confidence, people are going to go, wow, is Credit Suisse really being saved by the Swiss National Bank? So I don't think it's over. It's just the tip of the iceberg. And yeah, just sit and watch. Hold on to your stack of gold and silver. Yes, some of your investments in the system could be at risk a little bit, but if you haven't put all your eggs in one basket, you should be okay. And I think the world deserves a better system than just these banks holding the whole public to hostage for a few thousand people to make huge bonuses. And that's what it's all about, all the greed through the derivatives. And I'd say as well that the hedge funds, they're all kind of part of this, because they're provided the liquidity by these too big to fail banks to speculate on the derivatives. Yeah, the derivatives, I've always said, there's a derivatives time bomb out there, and this is all part of it. So let's quickly look at where the markets are this morning. It's 8:20 a.m. London time. That's the other thing. It's going to be very volatile out there. So hold on to your hats in terms of the precious metals. I would say it's not really the precious metals that are volatile, but the currencies, the fiat world is getting volatile. So think in terms of grams, ounces, and kilos. So we got spot gold at 1922. It's up about $3. High's been 25 and the low has been 07. Silver is up 11 cents at 21.88. High's been 94 and the low 64. One thing I would say, yesterday's video, when I did the video, everything was really quiet. And then it all kicked off after I posted the video. Some people said, oh, it's too, what are you talking about? But I can only tell you what's happening right now. And right now it looks like the stock market is relatively stable. The Dow is basically unchanged. NASDAQ 100 future is up slightly, and the S&P is up a couple of points. The currency market, we're seeing the pound and the euro rebound. They had big losses yesterday, especially the euro, because I think Credit Suisse, even though it's not a Eurozone bank, it's part of the European Economic Area, and that's highly connected to the Eurozone banks, to the ECB. And talking about the ECB, they're expected to raise rates today at 9:15 a.m. Eastern Time, or 1:15 p.m. London time. They're expected to raise rates from 2.5% to 3%. That might not help things either. So yeah, sterling is up 1/3%, just around 121. The euro is up 0.4 at 106.20. The dollar is down 0.5% versus the yen, 132.74. And the dollar is down 1% versus the Swiss franc, 92.40. Swiss franc got hit a little bit yesterday. Dollar coming and rebounding a bit today. The dollar is unchanged versus the Chinese yuan. Aussie dollar is up 0.5%, 66.50. The dollar is down 1/4% versus the Canadian dollar at 137.34. And the Kiwi dollar is down 1/3 at 61.68. To the general commodities, we got platinum up about $6, trading at at 976. WTI crude is up 0.75% at 68.10. Brent is up almost 1%, just below 74. High grade copper is up 1% at 388. So how come gold and silver did quite well yesterday? I know silver lost a bit of ground towards the end of the day. Well, I think it's because they're starting to show qualities of a safe haven currencies and money. And I think it's going to continue because the whole, not just banking system, the too big to fail banking system is in trouble, but the whole central banking fiat currency system is in trouble. All those years of money printing, artificial interest rates are coming home to roost, in my opinion. So before we finish, just quickly look at the treasury market. We got the 10-year yield at just below 350. It's unchanged. The 2-year is down 3 basis points at 395, so back below 4% there. For the UK, we've got the 2-year up 8 basis points at 337, and the 10-year is at 341, up 9 basis points. So still a lot of volatility in government bond, in the government bond world, and that's not good. I think this banking crisis could spread, of course, to the government bond market, and that would be really serious. So with that, I'm going to wish you all a very good day. Take care. Bye.